Most beginners use RSI backwards. They buy when it is low, they sell when it is high, and then they wonder why the market keeps going against them. Price keeps falling after oversold. Price keeps pumping after overbought. So they start thinking RSI is useless. But the problem is not RSI. The problem is that most traders use it like a buy and sell button. In the previous video, I explained why I prefer using the 80 and 20 zones instead of only using the common 70 and 30 levels. But in this video, I want to make it more practical. I'll show you a simple RSI setup I call the Strength First setup. Because I don't want to buy weakness, I want the market to show strength first. Then I wait for the pullback. Then I let price action confirm the entry. And in this video, I'll only focus on the buy setup in an uptrend, so it's easier to understand. What is the Strength First setup? Here's the basic idea. In an uptrend, I do not buy just because RSI is low. I want to see the indicator reach the 80 zone first. Why? Because when it reaches 80, it tells me buyers are strong. Not slightly strong. Strong enough to push momentum into an extreme zone. That means the market has real buying pressure. But here is the important part. I do not buy immediately at 80, because by the time RSI reaches that level, price has usually already moved a decent distance. If I chase there, my entry can be late. My stop loss can be too wide, and the risk to reward may no longer make sense. So instead of chasing, I wait. I wait for the market to pull back. And when RSI cools down toward the 40 area, I start paying attention. In a healthy uptrend, that 40 area can act like a fixed momentum support zone. But it is not an automatic buy signal. It is only a watch zone. The real question is, does price still hold bullish structure? If price is still making higher lows, holding support, and reacting well from an important area, then the setup becomes interesting. So the logic is simple. Strength first, pullback second, price confirmation last. That is the whole idea behind this setup. Why I don't buy immediately at 80. When RSI reaches 80, it shows strong buying pressure. But that does not mean I should buy immediately. And it also does not mean I should instantly short against it. A lot of beginners see high RSI and think, it's overbought, I should sell. But shorting strong momentum too early is like trying to stop a high-speed train with your bare hands. Even if the train starts slowing down, it can still keep moving forward because of momentum. Markets behave the same way. When buying pressure is strong, price can push much further than beginners expect. That is why I don't treat the 80 zone as an entry. I treat it as context. It tells me, okay, buyers are strong. Now I need to wait for a better pullback. I'm not chasing the train. I'm waiting for the train to slow down at a better station. Why the 40 area matters. In a strong uptrend, RSI often moves in a higher range. It doesn't usually collapse from 80 straight down to 20. A healthy bullish market often moves between 40 and 80. The 80 zone shows strong buying pressure, and the 40 area can act like fixed momentum support. By fixed support, I mean it is a static level on the indicator. It does not move like a moving average. It is simply a level I use to see whether bullish momentum is still holding. So when the indicator pulls back toward 40 after reaching 80, I start watching closely. But again, the 40 area is not a buy button. It only tells me momentum is pulling back into a zone where buyers may defend the trend. To actually take the trade, price still has to confirm. What RS I cannot tell you. There is one thing every trader needs to understand. This indicator does not tell me the exact entry. It does not tell me exactly where to place my stop loss, and it does not tell me where to take profit. It only tells me where market strength is leaning. Are buyers stronger? Are sellers in control? Is momentum increasing or is momentum fading? The actual trade must come from price action. That means structure, support and resistance, old breakout zones, retests, fair value gaps, Fibonacci areas, or price reaction. In simple words, RSI gives me the context. Price gives me the entry. That sentence is important because if you only use RSI alone, you are still guessing. But when momentum lines up with price structure, the setup becomes much cleaner. So, where do I buy? After the market shows strong bullish momentum and the indicator pulls back into the watch zone, I usually handle the setup in two ways. The first way is buying at a confluence area. The best pullbacks usually happen at logical areas: support, old breakout zones, retest areas, Fibonacci zones, or fair value gaps. If price pulls back into one of these areas and that lines up with the RSI pullback toward 40, then I start paying attention. At that point, I may consider a buy around that support zone. The stop loss can go below the nearest swing low or below the support area I'm using as invalidation, but I still want to see some reaction. If price touches support but sellers are still aggressive and buyers are not showing up, I don't rush in. The second way is waiting for lower time frame confirmation. If I don't want to enter directly at support, I can drop to a smaller time frame and watch how price reacts. I may wait for price to break a short-term bearish trend line, or break a small bearish structure, or start forming a bullish structure again. For example, during the pullback, price may be making lower highs and lower lows. Then, around support, price stops falling. It breaks the nearest lower high. Then it starts forming a higher low. That gives me more evidence that buyers are coming back. So the trade does not come from RSI alone. It comes from the confluence between momentum, price structure, and a logical support area. That is why I call it the strength-first setup. The market shows strength first. Then it pulls back. Then price confirms whether buyers are returning. Simple example. Let's imagine price makes a strong move up. During that move, RSI reaches the 80 zone. I do not sell it, and I do not chase it. I simply mark that buyers are strong. Then price starts to pull back. The indicator cools down toward the 40 area. Now I ask three questions. First, is price pulling back into a logical support area? Second, is the bullish structure still holding? Third, is price starting to react? If the answer is yes, then I can start looking for an entry. Maybe price is retesting an old breakout level. Maybe it is holding a support zone. Maybe it is reacting from a Fibonacci area. Or maybe the lower time frame starts shifting back to bullish. That is the moment the setup becomes interesting. This is not about catching the exact bottom of the pullback. It is about waiting for strength first, then entering when price gives me a better location. That is a much cleaner way to use RSI than simply buying because it is low. When I avoid this setup. A good setup does not only tell you when to enter, it also tells you when to stay away. I avoid this setup if price breaks the bullish structure. If price takes out the important swing low, I do not force the buy. I also avoid it if support fails too easily. If the area where I expect buyers to show up gets sliced through with strong selling pressure, the setup becomes weak. Another warning sign is a deep pullback with no reaction. If price keeps falling aggressively and buyers are not responding, I wait. And I'm also careful if the higher time frame is bearish or too choppy. If the higher time frame does not support the idea, a buy setup on the lower time frame may only be a weak bounce. So I don't buy just because the indicator looks good. I need context. I need structure. And I need price to react at a logical area. A good setup also needs a clear reason to walk away. So remember this: strength first, pullback second, price confirmation last. That is the whole idea behind this RSI setup. I am not buying because RSI is low. I am buying because the market showed strength first, pulled back into a logical area, and price confirmed that buyers were coming back. The 80 zone shows strong buying pressure. The 40 area is only the watch zone, and price action gives me the actual entry. No setup works 100% of the time. This video is for education only. It is not financial advice. If this helped, take 2 seconds to like the video. Thanks for watching. I'll see you in the next one.